The Relative Strength Index is a powerful momentum indicator. It tells you when there is a strong trend in place so that you can decide if it's good for you to ride the momentum or not. If you are into momentum trading and want to know whether you are entering too late, then the Relative Strength Index is going to be of tremendous help to you. It will help you improve your trading entries and hopefully help you take trades that go into green right away. After all, no one likes to see their account with a floating loss, especially when momentum trading. The Relative Strength Index indicator can help you do that if you apply it correctly. In this video, I will give you the Relative Strength Index cheat sheet to improve your trading entries. Now, in case you have not heard of the Relative Strength Index before and do not know how it works, let me do a brief introduction about what this indicator is. The Relative Strength Index is a momentum indicator that measures how fast price moves. And because it is an index, you will see that the values ranges from 0 to 100. You can see that two levels are marked right here. The 30 level is used to determine oversold market conditions, while the 70 level is used to determine overbought market conditions. You can use the Relative Strength Index to determine if you should be holding onto a trade or not as well. Essentially, it can function as a trade management tool. Most people misuse it and leave a lot of money on the table when the market trends. I will walk you through the mistake and how to use it correctly towards the end of this video, so make sure to stick around till the end. Now, before I go on further, please do me a small favor and hit that thumbs up button. It helps support this channel and I would really appreciate that. If you are new to the channel, do tap that subscribe button because we upload many valuable trading videos such as this that cost us thousands of dollars to learn. And you don't want to miss out on any new videos that we upload. To encourage you to pay close attention as well, because there are many distractions, we do a giveaway worth $37 for our plug and trade trading package. This package consists of the indicators that we use, more training videos, and the hedging strategy that made us over $30,000. So if you wish to participate, then look for an emoji somewhere in this video. You can also find the full instructions in the pinned comment down below as well. So earlier I explained that the region 70 and 30 denote overbought and oversold conditions respectively. But I want to take some time to go deeper because I see many traders misinterpret this. Most traders assume that when a price is overbought, then it's time to sell, and when a price is oversold, then it's time to buy. So the moment the indicator dips below 30 or goes above 70, they start buying or selling. If you have previously done that, you would have lost money. If you have not, then this video will save you a lot of money. Now, the reason why you shouldn't do that is because the price can stay overbought or oversold for a long time. Just have a look at a few examples right here. You can see that right here, the price has been in the oversold region for a long time before eventually rebounding. And right here, the price starts trending upwards and stayed in the overbought region for a long time. This is why you should never blindly trade overbought or oversold conditions using the Relative Strength Index indicator. Instead, the correct way to do it is to combine it with a trading strategy. You're going to need to understand the market context, the key levels, and a price action entry trigger. I've previously uploaded a video that shows you a step-by-step strategy that you can use with the Relative Strength Index indicator. It involves combining price action and the concept of divergence with the Relative Strength Index. Now, there's no point in repeating the strategy in this video, so I will leave a link to that video at the top right corner and at the end screen of this video. If you have not watched that video, then I recommend checking out that video next so that you can get the most out of this video. For this video, I want to stick to summarizing how to use the Relative Strength Index because after all, This video is meant to be a cheat sheet, something that refreshes your memory about how the indicator works. Now, if you wish to catch momentum trades, you want to focus on movements that have strength, and you can use the relative strength index to filter out these movements. Rather than using the 70 or 30 levels, you can add in an additional level, the 50 level. This is a simple and straightforward way to use the relative strength index. If the price crosses above 50, then it means that there is strength in the bullish move. And if the price crosses below 50, then it means that there is strength in the bearish move. You can use the 50 level to gauge if there's enough strength in a movement. So right here, this tells us that there is momentum in this bullish move. Look at how price continues to trend higher and higher. And over here, the price is bearish, and we see that the relative strength index dips below 50. Look at what happens to price next. A word of caution when it comes to using it this way. This is just an idea of how you can incorporate the relative strength index into your trading strategy. It is not an entire trading strategy on its own. I'm not saying that you should blindly buy whenever the relative strength index goes above 50 and blindly sell whenever the relative strength index drops below the 50 level. This is just a quick cheat sheet on how you can use the relative strength index. So I will repeat this once more, that this is not an entire trading strategy on its own. If you trade like this, you're going to lose money, and that's not something I want happen to you. So if you need a trading strategy, check out the video that I talked about previously. Now, earlier I mentioned that you could also use the relative strength index as a trade management tool. Say for example, you took a trade right here and you want to ride the trend. Now, how do you know when you should get out? Should you get out here, here, or over here? Well, you can use the relative strength index indicator. Recall that the region above 70 represents overbought and the region below 30 represents oversold. Well, do you also recall me saying that price can stay overbought or oversold for a long time? And hence, you should never attempt to trade solely based on an overbought or oversold condition. Now, this is why you don't want to take profit when the price goes to the overbought or oversold region. If you do that, you might be leaving a lot of the money on the table because, as I said, the price can continue to stay in the overbought or oversold region for a long time. Suppose you took a trade right here, but because you were afraid that the relative strength index is in the overbought region, so you take profit, and lo and behold, the price stays in the overbought region for a long time, and you miss out on all these profits. That's painful, isn't it? Well, if you use the relative strength index in the way I'm about to show you, you will be able to lock in more profits. The way I like to use it as a trade management tool is to wait for the price to exit out of the overbought or oversold region. Back to this example, your exit wouldn't be when the relative strength index hits the overbought region. It will be when price exceeds the overbought region right here. Basically, you are looking for the price to go into the overbought region and then exit the overbought region to signal that it is time to exit. It tells us that the trend is weakening, and thus it is a good time to lock in your profits. Can you see the difference? Let me show you another example, this time a bearish scenario. Right here, we see that price has been trending down. And suppose you took a trade right here for whatever reason based on your trading strategy. You can see that the relative strength index drops and eventually reaches the oversold region. Now, because you understand that price can stay oversold for a long time based on what you learned in this video, you sit tight and instead wait for the relative strength index to exceed the oversold region of 30. The relative strength index eventually starts rebounding and exits out of the oversold region. And right there, that's our cue that it's time to lock in profits and get out of the trade. Can you see how you would have exited at a good price level before price rebounded? So summing up this video, the relative strength index indicator is a momentum indicator that can help you improve your trading entries and maximize your trading profits. It primarily shows you overbought and oversold market conditions, and you must understand that price can stay overbought or oversold for a long time. You can also use the 50 level to gauge if a momentum has strength in it. To use the relative strength index as a trade management tool, watch for price to dip into the overbought or oversold region and then exit out of the overbought or oversold region. And that's it for this video. I hope you got value. Make sure to subscribe to the channel if you haven't already done so. We upload videos every week, so definitely hit that notification bell icon so you won't miss out on any new videos. As promised, I will leave a link to the video on a step-by-step guide to trading the relative strength index. Do check out that video next. Thanks for watching. I'll see you in the next video.